Hi everyone, welcome to Evolve and Execute. I'm your host, CS Rajiv Bajaj. In business, growth often gets the spotlight, but behind every sustainable organization lies something equally critical, that is the risk management. From market volatility to credit exposure to regulatory shifts and unforeseen disruptions, financial risks today are more complex and interconnected than ever before, especially considering the war situation and all these factors in mind. Now, for many organizations, they still take risk as a compliance function rather than a strategic lever. And how can the businesses move from reactive risk management to a proactive risk leadership? And how can financial risk framework actually enable growth instead of restricting it? To unpack all this, I'm joined with Mr. Kamlesh Shah. He is an expert and in investment, insurance, and corporate risk management with a deep experience of helping organizations safeguard and scale their financial future. Mr. Kamlesh, welcome to Evolve and Execute. Great to have you here with us, sir.
Thank you, Rajiv. Thanks for inviting me. And I am privileged that you have invited me to discuss whatever you know, also know. You are also doing a corporate finance. So
Yes.
thank you very much.
Thanks a lot, sir. Can you briefly introduce yourself to our audience, sir?
Thank you, Raju. Myself, Kamlesh Shah, and I am by education chemical engineering diploma holder. But finance is a forte. Since childhood, I was having a finance knowledge because of my father. My father always taught me how to earn money and how to save money, not just save money. And he told me at the age of 10, you should have your own income by 18. So I started investing in shares in 2015 with my pocket money and started applying IPO. You can say IPO. At that time, share application was there, physical, but started at the age of 15. So I was very fond of finance. And when I started earning, because applying share and then sold it with a profit, so it always excited me that we should earn by our own and then save money and then do own expenses. So I started my career in 1990. At that time, I was doing a battery manufacturing business. That was my father's business. And we were manufacturing automotive batteries.
Very
But
nice.
because of some, you can say, rules by the government, because batteries highly corrosive, uh,
Absolutely.
highly
Absolutely. I
corrosive.
agree.
We are using sulfuric acid and which is very much corrosive. So we have to
Right.
prevent corrosion. We have to prevent air pollution. We have to prevent water pollution. So it was not possible for me to go on a large scale at that time. And I
Great.
started my career in 2007 with life insurance. So
Very nice.
initially, I started as an LIC insurance advisor, and by grace of God, I'm qualified for MDRT from very first year. MDRT is a financial professionals organization based in USA, and this is a remarkable achievement for every financial professionals. And since then, I'm a life member of MDRT. This is my brief introduction. Anything else you
Thank you.
want?
Great. I think we'll have no more of you in the conversation we are going to have just now. So, Mr. Kamlesh, let's start with the fundamentals. How do you define corporate finance risk in today's business environment?
Great. See, as per my vision, I mean, I'm an insurance professional, so I see insurance everywhere. Whenever we say insurance, then people are always thinking of death. Insurance is not for death, it is for life. So, first, keeping in that mind, insurance is a backup, it's a standby process which can help people to avoid or to give a backup of any disasters, financial disasters. So you can set insurance as a hedging tool with your risk.
जी.
May I ask you one question, Rajiv?
Yeah, sure, sure.
In this manner, yeah. Why do cars have brake?
Cars sell brake, no, because yes, you have to
नहीं,
slow down. जी.
correct, correct. In our perspective, it always helps to speed up your motion because you are satisfied that there
Right,
is a brake. Whenever needed, we can
right.
apply brake. So
Apply
cars
brake.
are providing
Yes.
brake not to just slow down your growth. You can speed
Right,
up, but you should be
right.
ensured that you have a brake. So
Yeah.
insurance is a brake in your
Yeah.
journey, in a corporate success journey. If you want to
जी.
fly in corporates, you must have backup like insurance.
Very
So
nice. Very nice. That's a very interesting analogy you shared. So, what are the key types of financial risk that organizations should be most aware of today? Because I often see that people are not aware about the risks which are going to come.
correct, correct. I will correct your statement. I mean, I'm not correcting. I'm just adding that people are aware of the risk, whatever they carries. See, people knows business can fail anytime. Business in single decision, business can be a disaster. We have seen lot many examples. We cannot take name each and individual, but we have a lot of example that even a single decision can damage whole business.
जी.
So to prevent this disaster, there should be a break. Like I earlier told you, insurance is always a safeguard to prevent business losses.
जी.
How that we can discuss later on or in a detail. But every business owner or every entrepreneur must have a knowledge of, I mean, they must be having, they may not be implementing uh, today's scenario, cash flow is a very much critical issue. Every business is having a cash flow difficulties. They don't
जी.
have enough cash flow. Not each business, each and every business, but a lot of business are having a cash flow problems.
जी.
So cash flow is a major risk to every business. We have to calculate cash flow from each and every deal. We may close a deal, say thousand of dollars or thousand of rupees, but there should be a cash flow statement. So every business, they also, I mean, CFO always know how to maintain cash flow, how to become a cash rich company, but not possible for each and every business owners. So cash flow
जी.
is a major risk. Then if something happens to a owner, the whole business collapsed in a single day. So
जी.
that is also a major risk. These both risks can be mitigated with the insurance. I can say life insurance. How? That we can discuss in detail in case to case study. It is not common for all the people, all the businesses. We can have life insurance, we can have other insurance to mitigate this risk.
Perfect. Perfect. So, how can organizations integrate risk management into their overall business strategy?
See, Raju, you always know there is a lot of type of insurance are there for business owners. You can
जी.
say fire insurance, you can say motor insurance, you can say health insurance, you can have life insurance. These all different types of insurance are always helping business owners to uh, to decrease their loss. Suppose an employee get hospitalized, so
जी.
always an employer have to finance them. Otherwise, they will lose employee. So every business house have their own medical policy. They took group health insurance. They took life insurance for key employees. You must be aware about key man insurance.
Yeah.
So yeah, so key man insurance is always helpful for the business owners. So you can divert your losses or your risk to insurance in various means. There is
जी.
always a customized or a tailor-made plan for each and every business owners. They can discuss with us anytime. So I think this is the best tool for them to minimize their loss and come over about the risk.
Very nice. What role does leadership play in building a strong risk-aware culture? Because sometimes, the risk awareness culture is missing in the organization. So, how the leadership plays, how the leader can actually change that situation?
See, this becomes a very critical for each and every person. I mean, it plays a mindset role. Your mindset may be different. My mindset will be different. So if you build your business, you will set up as per your requirement or your thought process, and I set
Great,
up as per my thought process. So there should not be any conflict between the development of the business. I mean, each and every employer always focus on profit, always,
great,
and there should be
great.
a profit only. Nobody thought about
Mhm.
loss.
Yeah,
But leadership plays a vital role because they are aware about the loss and profit both.
indeed.
Leadership always think about loss first. I mean, what will be the loss? What will be the loss of employee? What will be the loss of profit? Well, what will be the loss of business collapsed or demand does not increase? So they play a vital role. I mean, leadership thought process is always required. Uh, each and every leader, we can say, in software, we have seen TCS company, and then Infosys. We can have a lot of examples what they have played a vital role in developing their business. So whole
Great.
segment, you can say, whole IT segment is been get benefited with their leadership. So leadership is always required. Leader always play a vital role. We have seen a lot of business houses collapsed because of leadership only. So,
Absolutely. Absolutely. And how important do you think is the insurance as a tool within the broader financial risk management framework? Because that is, I think, your specialization. So please throw some light on that. Yes.
yeah. That is very good question. I was always eager to answer this question whenever somebody
Yeah.
asks about the insurance. It is my forte
Yes.
and my
Yes.
favorite subject. So, see, as I said earlier, insurance plays a vital role
Great.
to hedge all your risk, all financial risk. We cannot replace human.
Yeah.
Not possible. We cannot replace intelligence. That is
Yeah.
also not possible. But we always replace financial loss. And financial once the financial loss has been set off, I mean recovered, people can assign their job or their intelligence to other person also by hiring their intelligence, hiring their leadership. We
Right.
can always do that, but there should be a cash flow. What happens in a big empire? Only one person carries that intelligence of developing that business. We
Right.
have a lot of name. There is only a one person brain. If then that brain is not capable of working by any means, suppose a person is not capable of taking decision by way of say accident or anything, disease, or person is no more, then what should be done? So company can hire a professional management if they have sufficient cash flow, and that
Yeah.
cash flow can be managed by way of life insurance. It is a very useful tool. In India, it is not, I mean, not accepted as a financial risk management with a life insurance, but it is very much possible. So my target is to spread this knowledge to whole industry. Well, because India is having a lot of capability. We
Great.
can generate a lot of employment, we can generate a lot of startup, but this, I mean, this important tool, they should be spread in each and every employer. That life insurance is the basic tool to minimize all your financial risk.
Absolutely. I fully agree with you. And what are the most common mistakes companies make when managing financial risk?
See what happens, Rajiv, whenever we talk about the financial thing, first thing always all the employer thinks about the profit. And that is also true. Each and every business works on the profit only. So, in my opinion, what management should think if anything goes wrong with the business. See, you can achieve sales target, you can achieve your production target, you can achieve anything. But if there is not a sufficient cash flow, everything vanished. You
Right.
cannot you cannot run company just by doing sales. You cannot increase profitability just by increasing I mean capacity, production capacity. There should be sufficient cash flow, and
Yeah.
that cash flow can be affected by lot of risk. So always focus on cash flow, not just sale, not just production. So my personal thinking is that we should always think about the cash flow risk, and that should be minimized whenever it is possible.
Absolutely. I fully agree. I've seen people evaporating and companies evaporating just because of the cash flow issues.
Agreed,
So,
agreed.
how has the approach to risk management evolved in the last decade? India has also seen a lot of changes. So, can you throw some light on that?
And this is a very difficult question. As I mean, everyone is mitigating since 2016
Yeah,
demonetization.
yeah,
There's a lot of risk in cash flow in every industry. But there
indeed.
is still some industry. Uh, what they have done, I don't know, because they are also managing cash flow very effectively since 2016. Very, very few numbers in the company that are very cash rich. So I have studied that company, how they are managing cash flow.
Indeed.
So what I came to know that they don't just cut their expenses. They don't cut expenses to increase cash flow. They just take the risk management in financial terms, and they have taken a lot of financial risk management, including life insurance and including other factors that their cash flow, they are going for cash and carry, I mean, cash sales. They are
Yeah,
focusing with a lower margin of profit, but they expect very speedy cash flow. Earlier, what was happening that company is giving a lot of material in, you can say, 30 days, 60 days payment terms. But
indeed.
now they are focusing on cash with a lesser margin of profit. So
Hmm.
I think they have taken a very good step to increase their cash flow, and they are becoming cash rich company. So we should always focus on that. Obviously, with insurance factor is also there. There should not be effect of cash flow with one disaster, one thing. For example, a fire took place in a company, there will be a set off. I mean, there will be a setback in production or anything, but
Right.
that can be mitigated by insurance. You can say fire insurance. So
Yeah,
always I'm thinking about insurance, but there is another step is also there, not just insurance, but taking bold step by decreasing their profit margin and increasing cash flow. I think that
right.
will be a better step.
Very nice. So, data and technology also play a very important role in this segment, and everybody is talking about now AI and the different tools. So, what role does data and technology play in identifying and mitigating financial risk?
See, Raju, now it becomes very much easy to get data. I mean, with the help of AI, you can have all the data at one place in just a single click.
Yeah,
If you're thinking about this, you can say which company is profitable. We do not have to study balance sheet. Just in one
yeah,
click, we can get data.
yeah,
Uh, what is the factor affecting profit in each and in every industry? We can get data immediately. So data is vital, and
yeah,
everyone says data is a new gold.
yeah,
So data plays a very, very important role. Even in insurance, we get, I mean, we can get thought process of a person in just one click. Suppose
yeah,
Rajiv is taking up this say life insurance. I can get a study how many person in the age group of 50 are going for life insurance in just one click.
right,
You just
right.
have to think about the question and you will get the answer immediately.
Absolutely, absolutely.
And that
So, it
can
is the
help,
kind of, yeah,
yeah,
please
and that can
continue.
help to develop our strategy with discussing all the things with the prospect or the employer.
Right, right, absolutely. So, what kind of prompts you are using, what kind of questions you are asking the AI, I think that is really where the human intelligence is coming in. So, if you are, there is a growing company which want to build a robust risk management framework, where should they begin? What first advice would you like to give them?
I earlier said we should always focus on the cash flow, not just on the profit.
Ji,
So I always insist my client should think about the cash flow, not just the profit. Profit is always there. There should be a consideration of profit. But as I said, cash flow is king. And everybody knows cash is king.
cash is king. If you have money
Yeah.
in your pocket, you can handle anything
Yeah. You can
and
have,
everything.
yeah,
Yes.
absolutely. Absolutely.
And if your money is gone, you are always struggling with the basics. So we have come to the interesting round of our conversation, which is a rapid fire round. And in this rapid fire round, I'll ask you some pointed questions, and if you can give me a quick answers or one-liners, that will be great, Kamleshi.
Yeah.
So risk management is cost center or value creator?
Value creator.
Great. So, why do you think it's not a cost center?
See, as I said, don't just focus on the profit, focus
Yeah,
on the cash flow. If
cash flow.
anything goes wrong, your cash flow will be affected. So you
Yeah,
just compare the cost with the cash flow, not just
a-
profit.
absolutely. Prevention or mitigation?
Mitigation.
Yeah,
Because
because
prevention is also good. I can say prevention is always better than cure. But
yeah,
what happens in industry right now? We have to mitigate first.
right, absolutely. Insurance necessity or optional strategy?
Necessity. Always say
Yeah,
necessity. Always. It's
uh,
you can compare with the brake. Whether
right,
brake is required is optional or a necessity.
right. It is a necessity because without brake, you will, bang somewhere.
You cannot drive car.
So, absolutely, absolutely. So, biggest risk companies underestimate.
Pardon?
Biggest risk companies underestimate.
That is always a cash flow. I mean, people are
Mhm.
not looking cash flow. The
Right,
company
right.
which is going under turmoil, they always lost to overcome the cash flow effect.
Ji,
Always. You can
right,
study a lot of examples. They are not focused on the cash flow. They are just targeting the profit.
right. Data-driven decisions or instinct-driven decisions.
This is very tough question because both answer is good. I mean, data driven and instinct. But I will
Ji,
say instinct.
ji, ji. Okay. And risk appetite, aggressive or conservative?
Risk appetite should be conservative.
Conservative. Very nice. Compliance versus strategy, what matters more?
Uh, Compliance, because without
Compliance.
compliance, your strategy fails.
Absolutely. If you're not compliant, your strategy will go for a toss and you will not be able to handle
Yeah,
it.
absolutely,
We have
absolutely.
we have seen Satyams, we have seen WorldCom, and we have seen many other
Correct, correct, correct.
examples. One financial risk every CEO should track closely.
The financial risk, loss of intelligence or loss of brain, they should
Right.
always consider this.
Hmm. Okay. And most overlooked aspect of risk management.
That is life insurance.
That is your favorite subject. So, of course, people are still not coming in terms with why life insurance is important, and there are different schemes like term insurance and other insurances also I'm aware of, but people are still struggling why they should go for it. Anyway, corporate risk management in one word.
Corporate risk management. As per the one word is, I mean, one word is only a cash flow, cash flow, cash flow.
You're very focused on cash flow management and cash flow.
Yeah.
And I think that is a mantra, and that is the crux of our discussion today. That if you have a good cash flow management, you can tide any set of problems. You can always manage the situation. But if you are stuck on the cash flow, then most of the easy things will also become difficult for you. So, what stands out from today's conversation is that risk is not something to be avoided. It is something to be understood, managed, and leveraged. Organizations that treat risk management as a strategic function don't just survive uncertainty, they use it to build resilience and long term advantage. So, Kamlesh ji, thank you very much for sharing your valuable insights on how business can rethink financial risk in a dynamic world and how we can actually manage our cash more effectively. Uh, any last set of advice for our MSME entrepreneurs as well as the startup entrepreneurs?
Thank you, Raju, for giving me a valuable time to share my thoughts. I'm not giving any advice. I'm just sharing my thoughts. If you are comfortable, you can spread it across your entrepreneur friend. See, my sharing is that life insurance means not a death; it's a life. That's why it is called life insurance. Because whenever a person goes away from the family or from the business house, the survivor has to survive, and there should be a financial management for them, for family, or even I can say they can plan their profitable exit from the empire also with the management of life
Absolutely.
insurance. They have to
Absolutely.
also, suppose you want to retire at the age of say 60, 70, but with profit. This is very much possible with life insurance. So
Right.
always think about the life insurance as a tool for cash flow, not just death. Death is by
Abs-
default, and everyone has to
Absolutely.
go. Everyone has to
Yeah.
go. We don't know the exact date, but we should
Yeah.
go with the profit. We should go with the cash flow. That is my sharing. Thank you very much.
Thank you. Thank you very much for sharing your success mantras with our entrepreneur friends. To all our listeners, managing risk isn't about playing safe, it is about being prepared. And that preparation, as Kamlesh ji mentioned, is cash flow. And cash flow, if you have a strong cash flow management, you can succeed anytime, any day. So until next time, keep evolving, keep executing. This is CS Rajiv Bajaj signing off with Evolve and Execute. We'll come back with another interesting set of conversation. Thank you. Until then, bye bye.
Thank you.